Hi, this is Sam, host once again, and in this chapter we will learn the basic terms used in case of mutual fund. We will start with net asset value or NAV. NAV represents the value of a unit of mutual fund. The concept of NAV may sound similar to the market price of a share, but there is a significant difference. Unlike share price, NAV is not influenced by the market demand. NAV is calculated as the formula total assets held by the scheme minus the liabilities divided by the number of units. Now we will go into growth and dividend options. Now, in any investment, the return is achieved through two ways. One way is you get the capital appreciation, or you get periodic cash flow in form of interest or dividend, and the total return is the sum of these two cash flows. Now, um, in case of a dividend option, the scheme gives you periodic cash flows and the capital appreciation is generally lower. In a growth option, there is no periodic cash flow, but the capital appreciation in the scheme is higher. Now we will understand a regular and a direct option. Now, in case of a regular plan, the mutual fund is distributed through a distributor, whereas a direct plan is subscribed directly with the asset management company. The difference between these two plans is the expense ratio charged. A regular plan generally charges a little higher expense ratio. Now we will understand open-ended and closed-ended funds. Closed-ended schemes means any scheme of a mutual fund in which the period of maturity of the scheme is specified. Closed-ended funds sell a fixed amount of units and the unit capital of the fund is fixed. These funds do not sell units after the new fund offer, or NFO, you know it, and also do not buy back the units before the maturity of the fund. They are listed on the stock exchange through which investors can exit. These funds generally employ investment strategies which take long time to play out, and restricting withdrawal from the fund allow them to implement those strategies without creating liquidity for possible withdrawals. Now, the limitation mentioned above doesn't apply to open-ended schemes. The units are easily bought and sold at current NAV. Now you understand the different systematic transactions. There are various systematic transactions available in mutual fund. SIP, that is systematic investment plan, SWP, that is systematic withdrawal plan, STP, that is systematic transfer plan, and switch. Now we'll learn about these systematic transactions in detail later. Now we'll understand benchmark index. Now any investment has to be matched with some benchmark so that we know how it performed. A benchmark index is a market index using which fund managers measures their performance. The benchmark depends on the investment objective and the type of the asset the scheme is allowed to invest in. Investors should always check the benchmark index of the mutual fund because the return and the risk significantly depends on the choice of the benchmark index. For example, large cap fund use BSE Sensex or Nifty 50 as benchmark index, so the return profile of these funds are expected to correlate with Sensex or Nifty 50. Total expense ratio. Recurring costs in a mutual fund, such as fund management costs or distribution charges in case of regular plans, are deducted from the net asset value NAV of the fund to calculate NAV in a daily basis. Total expense ratio is equals to total recurring cost in a year divided by asset under management. Entry and exit loads. Entry loads used to be charged by some funds when investor invested but SEBI has banned entry loads. Depending on type, fund may charge some percentage of account value at the time of redemption. Most funds only charge an exit load in case of redemption before a certain period, for example 1 year.